Hi traders, are you tired of always getting stopped out of the market and price will end up going to your direction and even becoming a very big move? I know how frustrating that can be. That's why I worked on this strategy and I've been trading this strategy for quite a long time now. I'm not just here to look for something and just no. So if you see here, this is what I have been trading. All right, so this is the strategy. I always have this box marked out and price will come sweep it, sweep those liquidity level, sweep the liquidity level, and we'll get those massive move from there. All right, here it is to sweep those liquidity level and price will push way high. Okay, so first and first, in this video, I'm going to give you the indicator that you will use, but most importantly is that you need to know the time, all right? And you need to know what time to engage, which is during New York section, all right? You need to know what time to engage. So this is going to be AM. So you need to know what time to engage and you need to know what time to mark out. So between this time, this range here is between 12 a.m. to 3 a.m. all right? But there's an indicator that can help you mark them all out on your chart. So if you go to your indicator here, you type all in one section. Just type all in one section and this will come out. Okay, so when you type this one all in one section, it comes out. Just go to the settings and uncheck everything. Uncheck everything. When you uncheck everything, you can check this. You can check this. Then you come to this time zone and choose GMT -4. All right, just GMT -4. Then you can choose one of this. All right, but when you choose one of this is where you put the time. Put the time. This time. This is the time that you use. Then you can use any color that you want here. It doesn't really matter. All right. So once you have that, then this would be on your chart. All right. This is what's going to be on your chart. Okay. That is step 1. All right. Then step 2 is you want to know what higher time frame it's saying. All right. You want to know if higher time frame is bullish, okay, or if higher time frame is bearish. Because trust me, guys, any strategy that you are trading that doesn't go with high time frame direction, you're just gambling. You know, you can argue with yourself, right? So you're just gambling because you wanna go where the money goes. You wanna go with the order flow, so that you don't take a trade and price will be playing around your entry. You don't want that. You don't want that to happen. Okay? You wanna take a trade, price will move. It's either it moves to your TP or it moves to your stop loss. When it moves to your stop loss, then you know you're wrong. All right? Then you have to check again and see what you did wrong. All right? So when we are bullish on the higher time frame, all right? If we are bullish, you want to focus on the lows of this range. If we are bearish, you want to focus on the highs of this range. On the higher time frame. This is not the higher time frame. This is the lower time frame, and this is not the entry time frame. Okay, we're going to get to the entry time frame. So that is step 2. Okay, so step 3 is when you mark out these levels. All right, you want to wait till New York section 9:30. You want to wait till 9:30 and see which side of this range price wants to take out. Of course, when you're bearish, you're already expecting price to take out the high of the range. Okay, that is what you're expecting. So if that doesn't happen, then you don't have the trade for that day. You can move on to the next day. All right, you move on to the next day. So one thing that I guarantee you this is that we have 5 days of trading, right, in a week. So within that 5 days, you will get quality setup, 2 to 3 quality setup. Some days is like 5 quality setup. Some weeks is like 5 quality setup. Some weeks it's even more than 5. But I guarantee you 2 to 3 quality ones. See, If you can catch 2 to 3 setups a week, you have nothing else to worry about. The risk to reward is insane. You have nothing else to worry about. All right. So then the next step is the entry model. I'm going to show you the entry model. All right. So just stick to the end. All right. So let's get to the part whereby I'll show you how I frame the trade. All right. Okay. Let's get there. As you can see, this repeats almost every time. Okay, so let's drop down to 5 minutes. All right, let's drop down to 5 minutes because we've already known what the high time frame is saying. We've marked out our levels. Okay, we have marked out our levels. Now is the time to get the entry. So I'm not just marking out these things randomly. These are actually trades that I took. These are trades that I took. All right, it's not random stuff. So I'm not here to backtest to show you what's the win rate and this. These are trades that I took, and it has a high win rate because if we're, as I said, if we are on the uptrend, right? You can see on this day there was no trade here. There was no trade here. Reason why there was no trade here, there was SMT. There was SMT on with this and US 30. So I don't trade SMT. Once I don't see a trade, I let it go. I move on to the next one. All right. But if we look down here, there was a massive trade from here. It was massive. It was a massive trade from here. Even here, there was a buy from here. There was a buy from. We're still at uptrend here. We're still at uptrend, and there was a huge sell from up here to down here. No, on this day we were bearish. All right, but this was a pullback to sell. All right, this was a pullback. So I bought here, I didn't sell this because I go with the current trade. If higher time frame is pulling back, I take it then. Okay, so let's get to the entry model. All right, so for the entry model, we're gonna drop down on 5 minutes. All right, what you want to see, it's that simple. You want to see a market structure shift. Okay, you want to see a market structure shift. You want to see price breaking a high, then pulling back, then go up. So in this market structure shift now, you want to see an inversion fair value gap with a new fair value gap being created. Okay, this is going to be your new fair value gap. You want to see a new fair value gap being created, and you want to see price break that high, the previous high. Okay, so down here, this is what you're looking for around this level on 5 minutes. You're looking for this around this level when price, as soon as price sweep this low, this is what you'll be looking for on 5 minutes. Okay, is that clear? And another entry model that you can also use is still the same market structure shift, but it comes in a different shape. Let's say price drop to this, then start pulling up, breaking these highs. All right, you can start taking your entries from here. Okay, as long as there's a market structure shift, there's a market structure shift. It could be market structure shift here, all right? Or you can also wait for this to happen. You can also wait for price to actually break this high here. Break this high. Okay, so this is not the only entry model that you can actually use. You can actually use any entry model that you know on the 5 minutes. Okay, even on the 15 minutes, but the risk to reward wouldn't make sense on the 15 minute. Understand? Okay, so let's get to the chart. Let me show you the entry. All right, I hope you were writing things down because this strategy, it's I don't know, it's very, 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 very powerful. I'm telling you, you can use it to trade the news. You can trade the news because those times that there is volume in the market, right? Once there's volume, they will take out the early buyers or early sellers. All right, so you won't be among those that they will take out. But the only thing now, you need to be patient. All right, so let me mark out here, and let's drop down to lower time frame. Let me show you how I cut this entry. Let me show you how I cut this entry. So let's drop down to lower time frame, which is going to be 5 minutes. All right. So this was actually okay. So if you look on the 5 minute here, I took this trade. Okay, I took this trade. So if you look on the 5 minute here, what can you see? We can see price came down, swept this low. Okay, then we started creating some highs here. As soon as we broke this high, this is a market structure shift, right? Pull back into it, then this is your buy. Then look at this. Price moved massively from this level. So what can you be targeting? You can always target that high where the pullback started from, right? Where the pullback started from, that is going to be your target, right? We just want to target this. Boom. All right. So let's look at another example. So on this day, there was no entry here. You can just let this slide. All right. You don't have to force it. So let's look at another day. You can see on this day was was one of those days whereby price created more liquidity. All right. You can see here. Let me mark this out. So price came here, almost swept it. It didn't sweep it. And one of my rules is that if price doesn't sweep it, I don't have an entry. Okay? There's no entry for me. Then what happened? Price came back the second time. Swept it. Created this high here. Because it didn't take out this high yet. But it came and created this high and broke this high. Alright? Broke this high. Then I have my entry here. I took my entry here. Some of my students took the entries from here, from this inversion. But I like to see a high get broken. It's either price break this high or it creates a high here that it's going to break. So you can either take your trade from here, which is a higher risk, right? Or you can actually trade your order block, right? If you're the type that trades order block, you can trade order. So the entries are all there. There's so many entries there. Right? Can either trade the order block or trade this. See, let me tell you something, right? When everything is there, the entry is not a problem. Alright? Entry is not a problem. Once everything is all there, we've already swept the high, you're going with the high time frame and you waited for the time. And I think there was news here. I don't know. I don't really pay much attention to the news like that anymore. Right? I don't really pay much attention. All I just want is that, okay, did price sweep this low? Did it sweep it or it didn't sweep it? If it sweep it, I'll take my trade. If it doesn't, then it's all good. I don't pay much attention to the news anymore, honestly. So you take your trade here and you target this high. This is where the pullback came from. Target this high. Okay? Target this high. One more example. Can show you more example. So it's your job now to go do some back testing. All right? Go do some back testing. You can see on this day we swept the low, we swept the high. All right. So if you wanted to take the buy from here, right, you can trade this buy. How did we get to this buy? So, but I wasn't gonna trade this buy because why? We were bearish. All right, we were bearish. I don't really remember this one in particular, but we were bearish here. So let's focus on the bearish side since we're talking about the bearish side. So you can see here, price broke this low. We broke this low. And we have the inversion. Inversion is there. We have this tiny fair value gap up here. We even have another one here. We have the inversion, we have the new fair value gap. Then price drop massively. What are you going to be targeting? You'll be targeting where the pullback started from. So you'll be targeting this. Okay? Once we hit this target, you close your trade, you're done. You come back the next day, you do the same thing again. Alright? So, see guys, it took me a long time to put this strategy together. Like some have tried to trade it without me explaining to them, but they could have asked me and I would explain to them, you understand? But they've tried and they abandoned it, but now I'm putting it out here. Anybody who wants it can come study it and see how it works, you understand? But one thing that I would tell you, You just don't go trade it once and you did it wrong and then you dump it and go look for another strategy. That is not how trading works. You have to stick to it and trade for a long time. You can see on this day here, on this day, this is actually a good example. On this day, we have, what do we have here? We were bearish on the high time frame. We're bearish on the high time frame and price failed to sweep the high. It failed to sweep the high. Okay, when it failed to sweep the high, you don't force anything and you don't try to force the buy and you let that day go. Because when the setup is there, the trade is going to be quick. Here, when the setup is there, it's going to be quick. Okay, let me show you yesterday what happened yesterday. Just yesterday. Okay, you can see here it was quick. Okay, let's say you are looking at this high here. Let me see how the trend was. Okay, here we were consolidating on the higher time frame. We're consolidating. So let's say you took this sell, okay, and price didn't get up to the targets. This could have been the target. Okay, price actually got to the targets. It got to the target. Then, or maybe you were bullish. Even if you're bullish, let's say you were confused because price was consolidating on high time frame. Nobody knows if we're really bullish or bearish. So give the buy. Let's say you took the buy. Could have been this target. Alright? This is more than enough example. Let's go to yesterday, exactly yesterday, to see what happened yesterday. Okay, so yesterday here, this was actually a tricky one. Okay, I'm gonna show you my setup in my group of yesterday. So this was yesterday. This was the setup of yesterday, right? You can see before price came there, I had it all marked out. Okay, before price came there, I had it all marked out. Okay, so let's go back to the chart. So yesterday, price took out this, right? But I was very distracted at where I was yesterday. I was very distracted. But the trade played well. You can see from this pullback, price swept it and we had this. Okay, and you can see here also price came back again for the second time because this sweep wasn't the sweep was there, but it almost created it created equal lows, right? It created equal lows, right? But the sweep was like one pip like that, and when price does that, it will later come back and sweep it. Okay, sweep it again. But one thing that you will always do is that when you trade in this strategy, you take notes. You take note, you write things down. Check what high time frame is doing and what lower time frame is doing. Okay, so if you want me to make a video on high time frame order flow, how you can understand the high time frame order flow, you can comment and let me know. Then I'll make a video of high time frame order flow. Then when you add those two things together, you don't need any other thing to trade. You don't need any other thing. With these two stuff, you can actually really trade, like really well. Understand this, understand what is it called? Okay, so see here, price came down here, and what did you see? It swept this low again, even deeper. Okay, even came deeper. So came deeper, and then we had the inversion here, and price broke the high, closed above this high, pulled back into it, and then started going up. Okay, I took my trade from here. Most of my students traded this because this is what they trade too, right? This is what they trade. Let me show you. This is what most of my students trade. You can see this guy has been killing it. This is what they trade, right? This is what they trade, right? I'm not here to show you what we don't trade. This is what they trade, okay? This is what my students trade, right? Because this is what I've been teaching them for a long time. You can see when we're checking to see if it swept or it didn't sweep, right? So this is what we've been trading. You can see the first move, right? This is what we've been trading. With this, you can finish the market, right? You can finish the market, right? So also, if you want to join us, want to be one of my students, you're welcome. you're welcome to join us. You want to be in the free setup group, you're welcome to join. All right. So this is it for this strategy, and I hope this strategy help you out, because you don't need so many noise in the market. You understand? There's a lot of noise out there. You don't need all those noises, right? Some mentors will deceive you, teaching you things that doesn't actually work, using it to wasting your time. You understand? You'll be paying monthly mentorship and whatever. You understand? And they'll be teaching you things that you can easily find on YouTube. All right. So this one now is one of the things that you can find on YouTube now. Right. Right. You can also find this on YouTube now because I'm putting it on YouTube. Right. So I'm giving credit to ICT. Right. Credit to him, and yeah, to him, because it's through him that I was able to put these things together. You understand? To put this, of course, he didn't tell me about the indicator and the exact time and all that. I figured all those things are out by myself. But when it comes to the fair value gap and liquidity level, how to, many things here, I think like 80%, or let's say 99% of the things here, is from, in short, 100% of the things here are from ICT, but I was able to put it together on my own way based on my experience in the market. Right? You understand? Okay? So don't let anyone deceive you. Try no. Alright, that is it for this video. I don't want to talk too much. That is it for this video. And if you have a question, you can comment and let me know what your question is. Alright?